what Forex is all about. So what is Forex? Here is the definition. Forex trading is a term used to describe individuals that are engaged in the activity, exchange of foreign currencies, often for the purpose of financial benefit or gain. That can take on the form of speculators who are looking to buy or sell a currency with the goal of profiting from the currency's price movement. So this simply means that the word from speculators, these guys are also another type of traders who are looking to buy or sell a currency with a goal of profiting from the currency's price movement, or it can be a hedge that is looking to protect their accounts in an event of adverse move against their own currency. So what does this mean? This basically means that according to the definition, it says Forex, in other terms or simple terms, is a way in which, or the buying and selling of currency. It is the simultaneous buying and selling of a currency at the same time. What does this mean? It means that you cannot do Forex trading without you having another currency of which you want to exchange one currency to another. Let's say an example of USD, all right? USD versus GBP. GBP. Sorry about my writing. I'm using my mic, my mouse. So this simply means that each time you are trading, you are exchanging one currency for another. If you say you buy, you sell USD, you are selling USD at the same time buying Great Britain pound. Let's proceed. So Forex is the term used for individuals that are engaged in the foreign exchange. This is not that complicated. You don't have to calculate everything. The system itself will do that for you. So the foreign exchange market, or Forex, or the short term of FX for short, is a decentralized marketplace that facilitates the buying and selling of different currencies. This takes place over the counter, or OTC, over the counter, instead of on a centralized exchange, whereby only few people with millions or hundreds of thousands of dollars were able to take part in the foreign exchange. Why? Because it was so expensive. That is the reason why this term is saying, instead of on a centralized exchange, where it is specifically a central place where everybody goes to for exchange. But now, because technology has improved, they have introduced an OTC, also known as over the counter, meaning you don't have to go to the central place. It has been decentralized, which means each broker has the authority to run and also offer liquidity to buyers and sellers on the market. Don't worry, you understand some of these terms. So what are some of the advantages of the Forex market or the FX market? This is another thing that people need to understand, as it is going to help a lot of people to know what they are getting into and also what they are involving themselves into. What are some of the advantages? Traders may be drawn to Forex for several reasons, including the size of the Forex market. You see, the Forex market is the biggest market in the trading industry. That includes the stock market, New York Stock Exchange. But the Forex market, a day volume runs up to $4 trillion a day volume on the Forex market. That is the first point. So the first advantage why you need to take part into this trading industry, number one, the Forex market, because of the size of the Forex market. Number two, a wide variety of currencies. You're not just limited to trading a few currency pair. There are many currency pair that you can trade on the Forex market and make profit from. Number one, it has a different levels of volatility. Volatility means the quick movement on the market. It can be up or down, just like that. Meaning, you and me as retail traders, because there are two types of traders. There are banks and also retail traders. As retail traders, we make money through the fluctuation of prices on the market. So that's what it means by volatility. So if the market is volatile, that means it is making quick and sharp movement in just a short period of time. And the other most important point is the low transaction cost. Just like I said, way back before, I would say about 50 years ago, for somebody to participate in the foreign exchange or Forex market, they had a minimum, okay? They had a minimum amount which somebody is supposed to have. Up to, the minimum was starting from 100,000 US dollars, okay? But now, after they discovered that few people, this was going to be limited only to big institutions such as central bank. If it is here in Zambia, it could be Bank of Zambia. If it is in America, it is what we call Fed interest, the Fed Reserve. But now they have reduced the low transaction cost, and you can also start trading the Forex market with a minimum of starting from $10 and above. And you can even grow this $10 up to $100 if you know what you are doing. The other advantage is the 24 hours, okay, a day trading during the week, meaning the Forex market never sleeps, okay? So right now, the market, as we are going to sleep, the Forex market will continue running because there are different types of sessions. We have London session, which starts around 10:30 Zambian time and 8:30 in UK. And we also have another type of a session which we call New York session, which starts around 14:30 Zambian time, whereas in America it's around 8:30 to 7:30, somewhere there, especially 8:30. So from there we have another type of session which we call Asian session, okay, which we call Asian session. So Asian session, what happens? The reason why I'm saying these points is because it says 24 hours a day trading during the week. So each time, if London session starts, okay, if London session starts around 10:30 Zambian time, because we are 2 hours ahead of London, okay, so 10:30, if London session starts, it will close around 14:30. So once the London session closes the market, they will hand over the sessions to New York. All right. So New York session starts around 14:30. So right now, the session that is running the Forex market all around the globe is New York session. All right. Until 01:30, Asian session will take over. From there, from 01:30 up to 10:30, Again, London session will take over up to Friday. The market closes. Sunday, it's Saturday, it's weekend, and also Sunday. So the market opens on Sunday, 24 hours sharp. The market starts. So this is what it means by this point: 24 hours a day trading during the week. Are you getting the point of what I'm saying, people? Is it making sense? Okay. I hope it is making sense. So that's what it means by that point. We are going to proceed. Those of you who have come late, we will proceed. We were talking about what is Forex, and we said Forex is a simultaneous buying and selling of a currency at the same time, which means that if you have kwacha right now, you want to exchange, you're going to America or you're going to South Africa, you want to exchange kwacha for US dollar. That's what it means by simultaneous buying and selling of a currency, which means you have to sell your kwacha by buying the dollar. And then if you're coming back to Zambia, you're not going to use US currency, US dollar or dollar currency in Zambia. So what you're supposed to do is to sell dollar and then buying kwacha. That's what it means by the simultaneous buying and selling of the currency. We also talked about why traders, another point which we're going to talk about, we are still on the advantages of the Forex market. We talked about the size of the Forex market. It is so big such that a day volume, every day, there is always about $4 trillion a day volume, the money going and coming on the Forex market. A wide variety of currency to trade, different levels of volatility, the market movements, low transactional cost, 24 hours a day, which means you can trade right now, you can trade in the morning as long as it is within 5 working days. Let's proceed. Why trade Forex? This is a very important point. Why trade Forex? And I am teaching you from the point of experience because this is what I do for a living. Why trade Forex? Number one, low transactional cost. What does this mean? Typically, Forex brokers make their money on the spread. We are going to talk about that, provided the trade is opened and closed before any overnight funding charges, okay, applied. Therefore, Forex trading is cost effective when weighed up against a market like equities, which attracts a commissional charge. So it has a low transactional cost. You can even pay maybe 90 cents on any trade depending on the broker that you're using. Number two, low spreads. We are going to talk about that as we go on. Bid or ask spreads are extremely low for major Forex pairs due to their liquidity. When trading, the spread is the initial hurdle that needs to be overcome when the market moves in your favor. Any additional pips that move in your favor is pure profit. So which means, in short, the spread is the amount which you pay to a broker for using their service in order to profit on the Forex market. Okay, we'll talk about a broker, which is the reason why I even started by telling you people that make sure you register with the broker that I showed you on. A broker is a middleman, all right? Here is you and me, we are traders. We have money, small amounts of money, okay? And this is a B, which is a broker. And we have big banks like Bank of Zambia or Federal Reserve Bank in America or European Central Bank in Europe. So we as individuals, we cannot go direct to these big guys to say, we want to trade Forex. The amounts that we have are too small. So we have a broker, which is a middleman. So we have to go through this middleman, which later is going to connect us to these big liquidity providers for us to trade. So for us to use their services, we are supposed to pay a certain small amount. It can be a $1, it can be a 50 cents, which we call a spread. That is the reason why this point is saying low spread or bid and ask spread are extremely low for major Forex pairs due to their liquidity. When trading, the spread is the initial hurdle that needs to be overcome when the market moves in your direction. Okay, so you have got, I'm sure I have clarified only the point, low spread. So a spread is a certain amount that you pay. Another point, what is the advantage of trading Forex? Because it is so much important that each and every one of us understand the reason why we are trading or why we trade Forex. And I'm going to try by all means to use a simple language instead of the jargon so that everybody can understand. Why trade Forex? There are more opportunities to profit, okay? Forex trading allows traders to take speculative position on currencies going up, appreciating, or going down, depreciating. So how will you be able to know if the currency is going to go up so that you buy and make profit, all right? Which means that if you see that the market is here and then you buy from here, the market start going up. From this level up to that level, there is profit. And if the amount that you have in your account is not going to remain the same. Why? Because the currency that you analyzed using your strategy that it is going to appreciate in value, you bought here from this level. If, let's say, if the dollar was at 11 kwacha in Zambian currency, and then you buy a dollar right here, it pushes up to this level, all right? It reaches maybe 22 kwacha, and you had maybe 100, the time you bought a dollar, you had $100 in your account. It is no longer going to be $100. Maybe you're going to grow up to $500 when it reaches up to that level, okay? So that's what it means that by saying Forex traders more profiting opportunities. Forex trading allows traders to take speculative position on currencies going up, meaning if it goes up, it appreciates. If it comes down, it drops down, it depreciates, okay? Furthermore, there are many different Forex pairs for traders to spot profitable trades. So if you see that the market is here, all right, and you have dollars, all right, and it is maybe at 22 kwacha right here, and then you see that dollar is going to start dropping and you're in Zambia, immediately you are going to sell your dollars by investing in kwacha. And if the market starts dropping, all right, the kwacha would start appreciating. So I'm sure you've heard where people are busy saying kwacha has dropped the value and all those things. This is what happens on the market. We will show you, but for today, I just want to make an introductory to the Forex market. It is very, very much important. So the other point is what are the advantage of trading the Forex market? It means here, leverage trading. What does this mean? Trading Forex involves the use of leverage, all right? This means that a trader need not to pay the full cost of the trade, but instead only put a fraction of the cost. Way back, the leverage was too small and people were unable to manage trading. It needed for them to have huge amounts of money. But because of the leverage, an example that I can give of the term leverage, it comes from the word a lever, all right? In every car, there are also what we call gear levers or gearbox. Now imagine the drivers, they do not put much effort when it comes to driving a vehicle, all right? Just that small tool, a gear, is able to move tons of tons and the weight of a lot of people while it's driving at the high rated speed. So this also means that you can have a small amount of money for as low as 20, 30, or $50, yet you are able to trade a huge units of currency on the Forex market, which means you do not need to pay the full cost of trades, but instead only put a fraction of the cost. This has the potential to magnify your profits, but also your losses. So leverage is a double-edged sword. We'll talk about that. At the daily Forex, at the daily FX, we suggest a disciplined approach, okay, to risk management by restricting your effective leverage to 10, 1 or less, okay? So let's continue moving. Please bear with me. It's very much important as this is the foundation. And welcome to the Forex world. So let's proceed. And you're not wasting your time. You'll see who are the major players or who moves the market in the Forex. There are essentially two types of traders in the foreign exchange market. We have hedgers and speculators. Hedgers are always looking to avoid extreme movement in the exchange rates. What does this mean? This means that the hedge, these are the people who can buy at the same time they sell, okay? These guys, they can buy at the same time can sell, which means if the market goes the other way, they'll make profit. Or if it goes the other way, they'll also make profit, but make a loss on the end. So that is what it means that hedgers are always looking to avoid extreme movement in the exchange rate, all right? So think of big conglomerate like Exxon. This is a big oil company, and how they look to reduce their exposure to foreign currency movement. Let's also talk about speculators. On the other hand, are risk-seeking and always looking for volatility, sharp movements on the market. They can enter here, the market moves, and then they make a huge amount of money. That's what it means. Are risk-seeking and always looking for volatility in the exchange rate to take advantage. These include large trading desks at the big banks and retail traders. Now you understand that how big banks make money. So every bank, they have Forex traders. You may not see them, all right? You may not see their back-end traders, all right? So it says big banks and retail traders. Let's proceed. Now, after we understand about Forex and about the advantages of trading Forex, it is cost effective. You don't need to have a huge amount of money in order to trade. You can trade from as low as a small amount, yet you make huge profits on the market. That happens. People can have ever taught a student that was in 2019 who made from 3,000 kwacha, he made 29,000 kwacha in just a short period of time, in less than 1 minute. That was news. We'll talk about that as we go on. So that is what for the advantage of Forex. You can make a huge amount of money and at the same time you can lose. This is why guidance is needed. Now let's talk about the most important things on the Forex market that every trader needs to know. Let's talk about a pip. What is a pip? I'm sure I see my screen. A pip stands for percentage in point or point in percentage. And this is the best unit of measurement in a currency pair. So a pip is a point or percentage in point or point in percentage. It is the best unit measurement in currency pair. The value of a pip will differ based on the counter currency in the pairing. So a pip, in simple terms, it is a point in percentage. We are going to hear more of that as we proceed because it is going to be the topic. And our profit is calculated in terms of a pip, all right? And it says it is a percentage in point, all right, or units. So you